Hello, everyone. Always moving my microphone over at the very last second. Sorry, Chris. Anyway, here we go. And actually, let's get another sip of coffee. All right. So actually, we're recording right now. But anyway, what a doofus. Hey, there's the start to a show. Hello, everyone. Welcome back to the RationalInvestor.com daily brief. Geez, 2 hours of insanity. Probably, I'm gonna try and maybe not do 2 hours today. Let's try and curtail it a bit. Larry has raised his hand. What's on your mind, Larry? I see that on my screen. Larry, do you have a problem? Anyway, am I working? Chris can help you. 60 minutes on the dot. LOL. Oh, okay. Anyway, good morning. I thought I saw somebody post something there. Welcome back to the Frivolity. Today is Wednesday, 26th of January. Marching through first month of January here now. Today is an FOMC announcement day, and so we do have some fun rules about FOMC announcement days. We also had some EIA inventory numbers and home sales down the States come out. I had a nice little session with Johnny Hoagland to start the morning. And I highly encourage you, if you really do fancy yourself a trader, quote unquote, it's good to just get into just regular habits, especially you Europeans and stuff, where actually it's not even that late in the day. I think it's good to just get into those kind of habits where, if you want to live that sort of trader life, sort of repeat same thing day in, day out. A guy's dose with Johnny is it's not a bad way to start your day. So we're going to try and do our 20-minute sort of rundown here. Try and stay on focus. And then following that, I think we have sort of a set list of stuff that we want to talk about. And, maybe if anything, we can, sort of make a routine of how these weekly videos go. So without further ado, let's jump into it. Maybe can you lead me in with a guitar feed here, Chris? Oh, actually, YouTube doesn't hear that, though, does it? Anyway, there you go. Thank you, sir. So everybody in the hangout, when you hear that, it's time to move on. Got to move on to the next topic. So we're going to try and do, I guess, our routine is sort of in the news. 5 minutes on that. Econs, I suppose, breadth and what the signaling system is telling us. And then I suppose maybe a look at some trading view charts. Something along those lines. So it's 9:04. So maybe we can start the 20 minutes as of here because the first 4 minutes are kind of intro. So when I loaded up the dashboard this morning, this is pretty handy. I've said this before. I like this as a nice, simple way to just get an overview of what people are talking about. Don't get sucked into the politics of all this. Big topics that I see over the past few days seems to be are obviously, inflation with the Fed meeting here. An interest rate decision in about 2 hours. Obviously dominating the economic conversation. Did hear overnight that some big tech stocks, Microsoft in particular, had some nasty sort of earnings news surprises through yesterday. I even saw somebody on the site mentioning this, which I appreciated. Thank you very much for mentioning that last night. But then, the stocks came rebounding after their sort of conference calls. I would, it's kind of a funny, I don't know whether it's news or not, but I did see people were saying that it seemed a bit odd that Jim Cramer was really, and CNBC was really pounding the table for retail to buy the market here. So much so that they interrupted one of their sort of bread and butter shows, that Shark Tank show, which should generate a lot of ad revenue. They interrupted it with a special session of Mr. Cramer. So I don't know whether we can really read too much into that, but it was an interesting anecdote. Um, situation hotting up in Eastern Europe. That's clearly going to be the center of our attention. Sad part about it doesn't really have to be this way. Um, it just almost feels like I said this to the day trader room this morning. I really honestly think that this is basically the 1940s are going to repeat themselves. Sad thing is geez, by the middle of the 1940s, famous stock operators like Livermore actually gave up, and God, he committed suicide. Some famous stock operators ended up basically in bankruptcy. It's a really famous story of the guy who founded General Motors was basically one of the biggest men in American capitalism before the crash. And he was really proud of himself that he had finally paid off all of his debts by, I think it was like the 1950s or something. But he basically lived out of a suitcase. It's very tragic. But I have a feeling that the 1940s, what we're going through here in the 2020s, are basically the same thing. Could we see a what's the expression I'm looking for? A manufactured, well, and the sad thing is manufactured, I don't know whether that's the right word. No, that's not it. A war of convenience. They'll try and keep it limited. They'll try and keep it like non-nuclear, I hope. But it ends up helping to deplete military stockpiles so big military contractors can get new contracts from governments to replenish stockpiles. Does it distract the populace from the economic troubles of a recession? And in this case, we didn't have to worry about in the 2008 crisis, or I suppose even the dot-com bust, was inflation is now back in our conversation, which we haven't had to worry about in a very long time. Of course, we all know what inflation really is, the banker's tax. And I might argue that actually it was interesting. Somebody was sharing with me today another piece of anecdotal evidence that Klaus and his world order have sort of wiggled their way into all of the cabinets of these democratically elected governments and sort of, curried favor with various different participants. And this gentleman showed me that my dear leader, of course, is well up Klaus's ass. And I think he actually even called it a fragrant bouquet, if I'm not mistaken, last time he was asked for comment. So inflation is an asset. I don't know. That's an interesting comment. Somebody said something in the lounge here. So, point of the matter here is we've got, Fed in the spotlight today. And so we can sort of take some liberties with the market. We really shouldn't, sort of believe anything that you see in the market on Fed day anyway. And our rule, of course, is don't trust anything until a full hour following the Fed announcement. So we got that to deal with. So I can take a little bit of liberty here, talking a little bit. I get the feeling that this is a war of convenience, and poor old Ukraine, they're just going to be sort of like the guinea pig of the world, and it sucks, right? Because that part of the world, man, they get shit on about once every century. That Poland, Ukraine, all that sort of in the Eastern Europe area, man, just turns into a bloodbath about once every century. I mean, there was the Napoleon. There's interesting. People are making similarities to who was it that we thought? See, I kind of think that Biden, believe it or not, now I don't know whether he has the intestinal fortitude, but it's interesting. Roosevelt, for almost all of his presidency, you never saw him stand up, and if he ever was standing, he was using crutches and all that because he had polio. He's in a wheelchair. So at least he had the better part of his mental faculties until the very end of World War II. But I get the impression that Biden is more of like a Roosevelt sort of comparison. And Roosevelt, quote unquote, the New Deal, I think basically that was his deal with the banksters. Let the banksters take over. The whole New Deal was that the U.S. government would take all the bad debt back and carry it. And it turns out actually that was an extremely profitable trade by the U.S. government. They bought the bonds in the open marketplace at like pennies on the dollar. And all they did was just hold on to them to maturity. People just kept paying their mortgages as best as they could, or whoever or currently owned the bond or the bond obligation. They just kept making the payments and paid off the mortgage. And it was a fantastically profitable venture. But this go round, I think the banksters are like, whoa, wait a minute. We're not going to let the U.S. government make all that money. We're going to make that money. And hence the Federal Reserve taking over the system. And now, for some mysterious reason, this private bank is now the holder of basically all the assets in the world. How the hell does that work? Chris is sending me a message. What's Chris saying here? Oh yeah, thanks. He sent me. So we're gonna try and do some of the topics that we normally do after the 20-minute summary, and of course that's it. Brian can stay on cue. When did I start this? I think I started this well over 5 minutes ago, didn't I? Anyway, I think we talked basically about the what I see in the news, FOMC. We got Eastern Europe. And then I do see some, sort of ancillary things. Nothing that's really jumped out at me has really taken the spotlight away from those two issues. And then, of course, we've got kind of like this, the sickness, of course, playing in the background. But it's almost like, and people have said this, the sickness probably, very much like, say, the Second World War. It's probably going to be around here for another, few years. It's going to be almost like it's just part of this is the world that we live in until it doesn't serve the purpose of Klaus's and Joey Diamonds of the world. And it's interesting how actually a lot of the heat's been downloaded onto this Klaus guy. Keep in mind, Joey Diamond, he's probably more influential than Klaus any day of the week in that sort of world. But nobody ever talks about Joey. Joey's he's made it Teflon. Anyway, that's sort of what I see specifically in the news of present. And like I said, with regard to the Fed, probably not a good idea to infer too much into the market, if anything. And it was good to see people in the lounge sort of talking about this. How does this normally go down? And the answer is, in my experience, if the market rallies into the Fed announcement, that's not usually a good sign for the other side of the market. And if the market sells off into the announcement, believe it or not, actually, that's usually pretty good for the other side. So, of course, we got this crazy January barometer problem to deal with. So, I mean, this market's just been an absolute train wreck, basically from the get-go. Hey, where's January 1st on this chart, right? Off these ES charts, that's like right in here. A little bit of up, and then, oh man, just a meltdown. And then, of course, I did decennial year. And Josh, that's probably a really good blog post for you to do. Is the decennial. I would have preferred that we probably waited on the January barometer until this actually finished, but it's here nor there. So as of Friday, we're going to have to do an update to that blog. I don't know whether you're here. I think you are. Yeah. So I think if anything, the decennial chart, that would be a great blog post. Anyway. Point here is things are looking a little tough. It's good to see we've got a bit of some sort of bottom coming in here. It's interesting how So Jim Cramer comes out and says, says buy, 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 and the general message from the market in this screwed up world we live in is, oh my God, this is a trap. I mean, at some point he's got to go, well, if that's what they're saying, what's the point in me even coming out and saying buy, buy, buy? All right. Is that the end of the econs? Oh, we didn't think we started on the econs. But appreciate the sound cue. I'll try and keep moving forward. Actually, good thing is the econ schedule here today's pretty light. Bank of Canada came out this morning, and I mean, this makes no sense. House market, housing prices rise 25%, and our beloved Bank of Canada does absolutely nothing to interest rates. Talk about this right here, my friends, is the direct evidence that our economy is totally being manipulated. And it has absolutely nothing to do with things like price stability. Right there. That's to be perfectly honest with you, that's comical. It's laughable. I don't get it. It doesn't make any sense at all. And the whole point of their existence, theoretically, is price stability and maximum employment. Whatever the fuck that means. So what a joke. 25% increase in house prices, and they're like, no reason to change interest rates. We don't need to. And it was incredible. I went to get my car fixed yesterday. I didn't really think there was anything wrong with it. And these cocksuckers at the dealership, oh, you need this changed and you need that changed and that needs to be fixed and that needs to be updated. Final bill, $880. Like, come on, you jerks. So, to me, it's critical that that car is in 100% tip-top shape because, it's for Liam. So I just bit the bullet and did it. And then that way, I have all the receipts, warranties, everything. It's all set, But still, I mean, for a Toyota Corolla, God damn, that's ridiculous. It's like, they actually have okay, well, I don't want to go off on that tangent. Anyway, point of them. And then, I was taking it, and they have Uber. The dealership doesn't even use the local taxi cab companies anymore. They do all their rides through Uber. Can you believe that? And the Uber driver pulls up in like a pretty fancy Volkswagen Passat or something like that, leather seats and the whole 9 yards. And I was like, "You can make a living off of this?" And he's like, "Yeah, pretty much." So I don't know what kind of money these Uber drivers are charging the Toyota dealership, but damn, I mean, I don't know how you make a living off that, but there he was. And he was saying, well, I'm looking, I'll get a job in construction. I can make $2,500 a week. And I'm like, $2,500 a week in construction? $10,000 a month in construction? Seriously? Is that the world that we live in? So, I need a real crash course on what actual a half decent income is. I thought I was doing pretty well when we set our salaries at 100 G's. I mean, fucking 100 grand is 100 grand. I thought, hey, man, we're living pretty good, but we're living a construction worker's life. This is nuts. I can't. It makes no sense to me at all. So sad. Anyway. If anything, this is a really good example where you're always a student of the market, always, and even in your old age, you'll still be a student of the market. So I'm learning as we go here. U.S. econs, new home sales. So this is the whole idea. Because the Fed owns all these bonds and all these mortgages, what do you think the odds are that they're going to allow the housing market to slow down? They're going to allow housing prices to top out, and heaven forbid, they're going to allow housing prices to go down. What do you think the odds of that are? I'd say probably not very good. What? I mean, the banks own and operate this system. They can just, as soon as they see any economic weekends, they can just turn the printing presses on, right? You've all told me this. So, and of course, our beloved Bitcoin. So as long as this is still relatively firm, and if we see this is an interesting stat, right? Because you can see the trend was sort of topping out and coming down, and then all of a sudden we're starting to perk back up here. And I did notice that sort of, maybe the economy is getting going a little bit too much. Things again going. Remember, the first 2 week study of Q4 showed a very, very strong economy. And then all of a sudden we had this Omicron, and basically everything sort of went on pause, and all stimmy and all that kind of crap can start kicking back in, unemployment and all that nonsense to justify more money printing, and all of a sudden the housing market starts booming again. But oh, wait a minute. This is the first 2 week study of the first quarter. Uh-oh. Where are we on the economic cycle? Here. I think I showed you. I'm not quite sure if I tweeted it out or if we blogged it. But yeah, I wonder what I did with that image. Maybe I'll try and find it for Friday. Oh boy, running out of time. Thanks, sir. But I think we're right back into this is an insanely strong economy. And of course, crude oil prices are launching higher later on when we look at the day trading. I'll show you the bullish bot that's set up on energy this morning, which here means that the Fed's got to start getting seriously active, right? We're in full recovery, market top, right? And that's usually when the Fed starts raising interest rates to cool things down. So, back to, I guess, the econ kind of numbers here. That probably should, and interesting too, that would be a V bottom, right? That was a new low there. So we should see a test of that low anyway. So I was a little bit surprised to see that, but showing, very strong housing, not crashing, that's for sure. EIA oil inventory stocks, and this, of course, crude oil market moving higher. So this doesn't make any sense at all. The market's looking for a drawdown, and of course, there's a huge build. So which way does price go? Up. That doesn't make any sense. I'd be a little bit careful here. Something doesn't smell right about this, and I wouldn't be surprised if oil actually has to come off a bit here following the Fed. Interesting to see we had gasoline inventories here actually build not as much as what market was expecting. There was a huge build last report, and of course this is like driving. So what does this mean? Actually, that's a little bit better. That means that there was more demand and less actual gasoline produced, which usually means higher prices. Yeah. I beg your pardon. Greater demand, less supply. That's what would turn into that sort of situation where you have a smaller build than expected. So, it's interesting how this moved the energy market earlier on. We can talk about that after the summary. But obviously the main event here is in about an hour and a half. And remember, folks, the important thing, and they've even included a press conference now. So the important thing here is we can't trust the market for an hour following this Fed announcement. My hunch is, if you're a betting man, no change in interest rates, just like the Canadians. We're going to continue tapering and reducing our bond purchases of federal mortgage-backed securities. And if the market continues firm and the data continues strong, then we will seriously consider raising interest rates in the upcoming meetings. That's what I think they're going to say. So let's see what happens. All right, topic number 3. I think we like to go on to the breadth indicator next. Is that correct? I think so. All right, thanks, Chris. You're a scholar and a gentleman. Can you see, even within a week or two of doing this, getting a little bit better, getting a little bit better, right? So, if you stick with me a few months or so, we'll probably have this licked. Breadth indicator, some things that are jumping out at me. Interesting how the crypto market has flipped right over and now actually in bear mode. And my hunch is this doesn't ultimately bottom until this starts looking down in here like this. This is going to take a while for this to happen. And if anything, the fact that it's so short term down here means that there's probably got to be some sort of snapback. So I wouldn't be surprised to see a little bit of a crypto rally here. So you can kind of use this sector. It's interesting on most of these things. We've been sort of just sitting kind of in exactly the same position on most of these markets. Like the bond picture, slowly you can see medium term, it's getting a little weaker, a little weaker, a little weak. Short term hasn't really changed a hell of a lot. Commodities, same message as we had before. If this starts ramping up, and you saw the way crude's acting, we have to also, when Stuart's, poor old Stuart, he's really under the weather now. So everybody give best wishes and thoughts for Stuart and his family. So if this, we will work on building this out a little bit more robust going down the road. We actually kind of had fun yesterday talking about commodities, what's in here, But if this guy starts getting up really uppy up top here, then of course, because medium term is so overbought, that could potentially set up a crash scenario, kind of like what you're seeing out of crypto right now. But it's not there yet. That probably happens into the spring. Country funds, a little bit concerning about this. Like the whole damn world is pointing up right now, it looks like, off of this, which is dangerous because when I used to do the commodity trend survey report, whenever I had one particular sector of the economy all pointing one direction, they're all up, that was usually we're near the end of the move. So the fact that everybody seems to be pointing up here, that's a little bit dangerous. And we've talked about January barometer and stuff. I mean, keep in mind, folks, first 6 months of this year is not supposed to be pretty. Crypto, we talked a little bit about. If anything, it's kind of good to see it as negative as it is in the short term. Maybe we can get some sort of swing, but it's already rolled over here. And I don't think this ends, the bear market ends until we replicate this kind of image out of the bonds. Currencies, same sort of thing as the country funds, right? Because this is basically a proxy of all the world indexes. This is a proxy of all the world currencies versus the US dollar. Same sort of thing. And they're not overly bullish here. If anything, I'd almost say this is a bit of a neutral report. It's no real extremes here. Indexes, I don't know whether we need to work on this. There aren't that many components in this, so I'm going to really sort of refrain from too much comment on the indexes. If anything, what I wouldn't mind is almost like a basket of all the ETFs with all the sectors and stuff in there and stuff. Maybe use that. And then S&P 500, same sort of thing. Kind of a neutral reading here on the medium term now. Not really long-term overbought or oversold. Short term, a little bit uppy. So what this tells me is that, and I've said this to you guys repeatedly before, you can see the whole world is super uber bullish country funds. But the US market is not really medium term that uber bullish. I could see this flip over and go negative, and the world economy really get just absolutely punched in the nose here, including Canada. And the US market doesn't really feel that much pain because it's not really insanely overbought. So anyway, that's sort of my comment there. On balance, mixed bag. And if I see everything all one direction or the other, then it's pretty much, market's going to probably go the other direction. So I see sort of mixed, and we might even tally up all these and give like sort of a total of bullish and bearish. I'm seeing a bit more red, especially on the medium term, Medium term showing a lot of red here. Sparkles of greens, but a lot of red here. Anyway, can't really infer too much out of that right now. I suppose, just the image. Picture says 1,000 words. We're actually getting pretty darn oversold here, right? Look at the sectors all the way down below 20. Commodities, maybe, like that's that kind of picture like we see. Commodities are trying to perk up here in the medium term, and they're already like uber bullish. So don't be surprised. That buy signal on the commodities, that leads to some sort of crazy ass blow off top there. There's the bonds. Ironically enough, if there was anything investment grade that I'd want to really take a good look at right now, ironically enough, it's actually the bonds. And as soon as crypto gets nice and cheap again, probably take a look at crypto. But investment grade, probably bonds, which is so ironic because, of course, everybody hates bonds. So good tune. Running out of time. So breadth. See if I can just quickly summarize this. Who's the leaders and laggers? It's hilarious how oil now is leading the charge here. I would say on balance, it makes sense. This is more like a reflationary trade. And we were even saying in the crude oil room that, Jesus, there's no reason why this thing can't go up to a better part of $100 now. The oil price. Also, too, last night, TRISOF, David was showing us his REI trade. I think that was one of his favorite stocks that he likes. Happens to be in the oil patch. REI. Gee whiz, look at that, eh? So, congrats to David. I think he picked that. I don't know whether it was down there, but nonetheless, it's moved up pretty nicely. So there's actually something that's done relatively well over this past 6-8 months when not a hell of a lot else has. It's interesting though, like one of our buddies, Tusk, not so much. Kind of blah. But I might argue, buying when they're crying. We're definitely down into reload zones here. But it's interesting. Tusk not really participating in this bull. So a little bit of a mixed message there. Did notice that Schlumberger, for example, very, very strong. This is a big oil service company. You can see this actually looks like a bullish bot. You know what? I hate to say it, but I remember I was looking for that fourth bot. I got a funny feeling this is it here. So something like this. Chris has got me under the gun here, so I'm going to try and do this as quick as possible. So boo. I seem to remember guys like Kevin were super bullish of this in years gone by. Anyway, so looks like something like that is working. And this thing wants to go basically right back up against those 2019 highs. That would not surprise me. So right up in there. Probably also too, you can do foggy boggies off of this. Oh, I can do a big one here. See where that takes us. There's that. And that. Come on, you. There we go. So roughly, it's not exact, but yeah, I guess that makes sense. Somewhere up in this area up here. So bot targets, foggy boggies, and there's a huge bottom there. We should probably do that one there. There you go. So there's just one oil stock. Yeah, there you go. A nice cluster of levels up in there. That's probably like Collins dump chaser zone in this case. So we go, where's Colin? Colin's in here somewhere. Pump chaser. We're going to call it the dump chaser. There we go. So there you go. So AB equals CD, bot targets, 38.2s, foggy boggies. I'd say this thing's probably got a date with $50 here, pretty much. In fact, probably what ends up happening is this thing just comes and it kisses the actual breakdown level where you're supposed to be short, and it just comes up. Notice that's also 4669, and then rolls over. So if anything, this is a perfect example. Buy when it snows, sell when it goes. The interesting thing is, if you did want to get in on these kind of trades, I think you have to wait for the middle of February, right? The seasonal trade goes middle of February to the middle of May, made money, none of the past 10 years, blah, 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 right? So I think you have to wait till the middle of February. So that means there's probably going to be some sort of pullback in these energy names, kind of like that REI. Maybe you hunt the pullback here to try and hunt that entry into the springtime rally. I don't know. Something to think about. But point here, energy super strong. Hong Kong. I don't really want to get into Hong Kong. I think we said this is the Chinese yuan. EZA. Who's that? Is that Switzerland? Switzerland's been really strong recently. So let's see. Who is this? South Africa. Interesting. Yeah, it looks like it's probably going to be spitting out Davo kind of signals. I guess that's a cup and handle. EZA. You know, who would be really good at this kind of approach to investing would be Fred, you know, because Fred does sort of like a lot of macro kind of stuff. What we got here? It's not really something that would get me excited. But technically speaking, yeah, I guess it kind of makes sense. If this thing breaks out, boom, 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 boom. So nice little dip. Is that the dip right there? Could be. I don't know. But if we go through, it looks like probably something like there. Then this thing's probably off to the races. That would be very technically strong. This chart right here looks like a megaphone. So there's not really a trade for me there, but I guess I could understand technically why we'd give it a half decent rating there. And as you saw from the dashboard, right? Where is that? Over here. Nice momentum. It's got quite a bit of momentum behind it. On EWZ, maybe that was Switzerland because I remember seeing Switzerland on here recently. Nope, this is Brazil. Son of a bitch. Coffee prices probably finally bottomed. I always notice coffee prices are really cheap locally. There's no way that can last. So anyway, interesting. So Brazil's finally turned the corner. Remember, I've said and you guys even heard me recently say that I'd love to go and buy some cheap Brazilian real estate with the really cheap Brazilian reals and the expensive Canadian dollars. To me, that seems like a no-brainer idea. And what I find fascinating, this always happens, is as soon as I said that, people go, "Oh yeah, but oh this, oh yeah, but oh that, oh yeah, but oh that, oh but oh that." And so I'm probably on to something. I wouldn't be surprised if that Brazilian real takes off here. And it's going to be another one of those goddamn sons of bitches. I knew that was going to happen. Anyway. So, interesting. Brazil's coming back. XLC, isn't that is that Canada? I don't know. Let's see. What is this? Oh, Isn't that interesting? This communication services keeps coming up on the bear side here. Is this for real? Wow, what a train wreck, eh? I don't know. Somebody in the communication services industry is getting taken apart. If anything, that's a really good analogy that we are not in this part of the cycle anymore. And I think what ends up happening is that when people start freaking out and thinking, you know, like Bill Gates economy, that kind of bullshit, it's sort of like, oh God, you might as well go buy your Googles and your Microsofts and all that. And turtle, but I don't think we're in that kind of economy. If anything, people are kind of backlashing against the Bezoses and all that, and you know, all the unicorn electric vehicles and all that kind of thing. If anything, as energy keeps rocking and rolling here, you're probably going to find that you know, the love affair for the gas-powered vehicle comes back, and we have like a renaissance. Hey, you know, buy American, use combustion engines, something like that. Wouldn't surprise me. All right. So what do we got here? FXA Australia. I know that we've been pretty negative on Australia for a while. So yeah, that's the Australian dollar. I would be just as negative on the Canadian dollar. I really don't understand what the hell's going on here. It makes no sense to me whatsoever. I think that the economy is insanely strong. It's inflationary. It's hyperinflationary. And the central bank is not doing its job. Doesn't make any sense to me. I must be there must be a huge piece of the puzzle I'm just not seeing. But you know, I do see it happening in Australia. Not only is the Australian stock market and economy reeling, but also their currency's getting whacked. That's what should happen. I think also probably Australian bonds. It'd be interesting to get an image of Australian bonds. I wouldn't be surprised if they're in free fall here. HYG, what the hell is that? High yield corporate bonds. Uh-oh. Okay, so just nice little trivia here for you. Who can answer me this? First and foremost, oh, darn, that's such a pretty, well, I guess we can go look at it somewhere else. Hold on. I sure would love to be able to comfortably use this. Oops, now what have I done? Because having the DI on there is good. But, I mean, first and foremost, what chart pattern does that look like? It's hard to see with the bands. That's, I guess maybe we got to go to the other side. Trading view. Steelers of Seward's RSI study. I love that. All right, there's your chart. High yield corporate bond ETF. First and foremost, is there any chart pattern at work there that maybe we should be cognizant of? What does that look like? And you should look at this and you should say, Brian, that looks an awful lot like this market you've been talking all about recently about the corporate interest rate market. But I don't know whether any of you would make that connection. Interesting. So somebody says a megaphone. Don't know. It's fascinating that you saw that. No. Actually, yeah, this probably, David, this is probably a good one for you to chew on. Something along those lines. Megaphone lines. I personally, I thought I saw a putty tat, but I could be wrong. But I guess I was seeing, me personally, I was seeing like that head and shoulders. Something along those lines. So dangerous territory here. Be interesting to hear what the Fed, does it make sense that, you know, the big conversation now is taper, right? It's not actually really, is the Fed going to raise interest rates? I asked a question there a second ago. Is this similar to another conversation that I wanted to have with you guys? And that was, I don't know, I didn't see any answers to that. But that was the Fed spread chart that I've been showing you guys recently. Where is that? Fed spread. So think of this image and then think of what corporate interest rates are doing on the short end. This is the bond. So that's like a long-term debt. Stephen Bayer is to resign. Oh, boy. There is the Eurodollar market. Do you see that same image? So this is like the 90-day paper image. And oh, gee whiz, looks like the spread's trying to break out to new highs. If the Fed doesn't do anything here, right, this is probably going to crank to new highs. So that'd be interesting to watch that. But can you see that image? That. This is a weekly chart, right? So this started 2020. And where are we here? Where was I? There it is. 2020. Yeah. So can you see that same image? Space, and this is what, shouldn't we debate mortgaging our kids' future? Fucking shut the fuck up, you sons of bitches. Just get in there and delete the currency. And you see how it's like, okay, we're back. And now, what does that look like? Do you think we should go and buy corporate bonds? What do you think? Is that a good idea? Anyone? Thank you, Josie. Yeah, maybe even buy. Somebody said recently, I don't like to short things. I'd be more than happy to short that. And what is the way that I prefer to play this market? Well, I like to buy put options, which give me the right but not the obligation to sell things. So if you ever hear somebody say, oh, Brian does this or Brian does that, I would kindly ask you to remind them to ask me first whether I do something or I don't do something. And they don't need to speak for me. I'll speak for me. uh, but long and short of that, what's the sort of minimum risk reward I'd like to see to justify taking a trade? Thank you, Edward. So even if I hit that and I just risked the head and shoulders top, and I used the 50% rule as my target, is that a trade Brian might be interested in? It's not bad. So it's not really a question of whether you like to short or you don't like to short. Remember, folks, risk first approach. I don't lose money. Hopefully what you see from me is year in, year out, Brian's, banging out his doubles. He takes his losses here and there, but on balance, account balances are always going up, just trickle, trickle, trickle. And then, if the market's not doing anything that I really like, I just don't do anything. And if I bought something and I've sold half on a double, well, nothing to do. You just sit there and do nothing. If I bought something and it's a little old lady strategy, well, just you bought it and sit there and do nothing. So, little concerning when I hear people going, well, Brian doesn't do this or Brian does that. You speak for yourself. I'll speak for myself. And if anybody's curious as to what I'm going to do or what I think, just ask me. I have no problem answering. So, this actually might be a trade I might even take a serious look at. So it is interesting how that how our system is saying, you know what, you better be careful over here. EWY, is that the Japanese yen? That sounds like a Japanese yen or something along those lines. South Korea. Oh, boy. Well, I suppose along the lines of Australia, what do you think the propensity of economic growth is out of China right now? And I get the impression that basically China is now the center of influence for Asia, just like, Russia wants to be sort of the center of influence for sort of Mid-East ish and Eastern European. That's why it's really dangerous for Biden, because really Ukraine is not his center of influence. And he really has no business going over there and telling them what to do. But I don't want to get into politics and all that nonsense. And of course, I think I started the broadcast off with what I think is actually going on in the background of why the tensions are rising. And sadly for the poor Ukrainians, they're caught in the middle as usually historically. That's exactly what happens. It's a bit dangerous. That's why it's so dangerous for Canada to go and make friends with Winnie the Pooh, because you don't want to be caught in the middle of these damn superpowers. It can get really, really ugly very quickly. All right. Blah, blah, blah. Brian's rhetoric. Sorry, everybody. And interesting. Is this Japan? Yeah. So we're getting negative votes out of. Interesting how Hong Kong was bullish, right? Didn't we find? Here's Hong Kong over here, right? That's interesting how Hong Kong keeps coming up on the bullish screen here. Because we got a lot of negative votes out of Asia here. Doesn't surprise me. Also, too, historically, Japan has almost no oil, none. So they are very, very sensitive. I don't know. It'd be interesting to see. I doubt South Korea and the Koreas have much oil either. But it would be really interesting to see how much of an influence this, exploding energy price an energy market is having on the Japanese and the Korean economies, and even Australia to that matter, because they don't have a hell of a lot of oil either. The people that do have the oil, and it's interesting again how history repeats itself. Who's got the oil in Asia? And I'd be curious. Do you guys know who's got all the oil in Asia? And it's a country that you don't really think of as a global superpower, but they have all the oil in Asia. I wonder if anybody even knows. Why did the Japanese bomb Pearl Harbor? Actually, I had this conversation with the day trading room this morning. Oh, I beg your pardon. Was it over when the Germans bombed Pearl Harbor? Hell no. Who said that line? Probably everybody knows off. So Josie says we cut off their steel and oil. That's right. To a certain degree, one might argue that that's a big motivator. And what was the purpose of Pearl Harbor? Was it that the Japanese wanted to invade Hawaii or even invade the United States of America? I don't think so. I think it was they needed to sort of establish a perimeter because they needed to go down and invade Indonesia. And actually, I didn't even see not a single one of you mention that. Maybe somebody over on YouTube said something. How we doing over there? Hey, Andre knew it. Jeez, you're pretty smart. I wasn't looking and seeing this YouTube page, guys, so sorry about that. I was just looking at the lounge post. The Rational Millionaires posting videos about market makers. He wasn't impressed with them. All right. So anyway, point of the matter here is, the more, they say if you don't learn from history, you're doomed to repeat it. It sure feels like this is the 1940s all over again. And this is 22. So that's like 1942. And interestingly enough, the apex of the Second World War, they say, was the Battle of Stalingrad. And that was, of course, in 1942. So, once that event happened, then it was clear sailing basically the other direction. The Axis, they couldn't do anything to sort of stop the Allies' tide. So I have a feeling this is an apex year. And it's fascinating if you juxtapose actually the word juxtapose itself, that's a pretty fancy word, eh? I remember when I first heard that in university from an English teacher or professor, beg your pardon. And man, that's all he loved using that word, juxtapose. All right. DJI, we'll go look at the Dow through the 1940s. So that's all through here. I got a funny feeling. Doesn't this look kind of familiar? So, I wonder, remember we had our big dump, and I get the feeling this was like, the January 2019, 2020. Yeah. And then 2021 was the insurrection, right? And all that nonsense. And we're just making our way through. If anything, I would think we're back up here. The only problem, and so I think right now, sadly, I think we're sort of like we might even be sort of right in here. The only problem with this is in real dollars, where the dollar is stable, right? If you go to today, and I've had this conversation with you guys plenty of times, right? That's this image. You can see that's where we are. If we look at this same period with the dilution taken out of the equation, and that's the key to all of this. So I tell you, man, to me, every time I'm looking at air, like I think about it in bed, it just feels like this is where we are, somewhere right around here, which means, gee whiz, there's 1942. Actually, we might even be, and actually, I guess that would be the start there. I don't think we're that far along. Let's see. I don't think this is the one I want to see. I want to see, yeah, this one. So I think this is this similar image. So, there's a big dump. Where's our 1942 one? There. Nope. Oh, darn. I think it was a different tab. Yeah, there we go. Brian's going crazy. Okay, so there's our 1942 scenario. Right there. And here's our current. So, does this look similar? I think there is a similarity to it. Is this top here, that there? I don't know. Maybe. Keep in mind that this is after. So this is over here. We didn't really do this here. I mean, that might have been that. Counter trend rally back up top. That's what I think that is. Then the sort of pull back against low. So I think that's what that is. Then the counter trend rally. I think that's what that is. And right now you can see how we're just starting to roll over here. You see how we're rolling over there? I think that's what sort of like this is. Does that make sense? Am I crazy? Does that make, have I sort of connected with anybody here on this? I don't know. So, there's 1941 all the way through to July 1942. And that's actually almost exactly what we're thinking about with the decennial report, right? But the somewhere around the middle, the middle of 2022, we're thinking the decennial report turns back up here. So I don't know. Call me crazy. Yeah, most people do. I think there's this is where we are, and this is basically our future here going forward. And it's going to be a slog, eh? This is just going to be a mess. I don't know where we are, though. I got a funny feeling we're like right there. And we got, this is our next sort of 6 months ahead of us. But once we get on the other side of this 6 months, oh my goodness, it's going to be quite an enjoyable market. The only problem is, I mean, geez, how long does the mark come on, Jesus, it's driving me nuts. Oh, because it's this screen. What a knucklehead. All right, so you can see it. Once we're on the other side of that summer, I think we actually rally right back up and go up and take out these highs. Now, is this on another big whack of stimmy? I have no idea. Is this on just the economy is really doing well? Excuse me. But I think that's our future. So Merry Christmas, Happy New Year. I'm not really going to be in a huge hurry to sell anything here over the next 6 months, and things might get pretty ugly. If anything, what I really want to do is just work some really stinky bids, see if I can pick up some cheap stuff. But I'm not really going to be in a big hurry. Definitely not going to be in a big hurry whatsoever. If anything, I'm going to be in a big hurry to just keep teaching you guys how to keep building your plans, and sort of managing your behavior. I still think once we're on the other side of this, oh my goodness, we've got absolute insane upside ahead of us. But this is like the next 10, 15 years of your life. I mean, so just let it play out. There's no hurry here at all. Okay, so we talked a little breadth. Had some fun just looking at the leaderboard. One thing I'm pretty pleased to see, it looks like crypto is sort of based a bit here. The only problem I'd have here is let's see what the other side of the FOMC brings us. Now, excuse me. One thing I will notice is that almost all of our universe is bearish here. Remember we had sort of talked about that. Crypto, like the whole universe is now officially bearish on both the short and medium term. We'd like to see this get completely washed out to know that this is the bottom, which I think probably happens probably through the late spring, early summer kind of idea. It's going to take a while for that to work its way down. But nonetheless, I mean, feeling at least like we've got some sort of basing action, just not enough for me to go like, all right, the damage has been done. It's over. If anything, I thought it was kind of interesting when I'm thinking about getting ready for the show tonight, the crypto show, pulling up these kind of charts. I think for the time being, there is your trading range. This is the absolute definition of trap bulls. These wicks, you know where these guys are sleeping right now. And I'll tell you, I was basically one of those guys. If I'm not the type of person where I'm willing to take a stop and lose a bit of money on the trade, then I'd be sitting there bag holding, right, hodler, whatever the hell you want to call it, right in this area, because that's where last week I was like, you know what, this looks pretty good. I think we're gonna rock and roll here. And that was when this candle was up here and we were feeling pretty good. And then all of a sudden, the fucking floor just fell out of the market, which sucks. And it happens. And it just goes to show this is not a very strong market and it's not a bull anymore. Totally collapsed. Then they had, which was really interesting. Today's Wednesday, Tuesday, Monday. So Monday we had one of those kind of funny days where basically we opened up and everything was just puking right out. It's the end of the world. Sell everything. Public probably, of course, went absolutely uber bearish. You know, I'd be interesting to see what the social media kind of attitude was in crypto through this. My hunch is it was probably pretty salty. And that's, of course, the makings of a bottom. I mean, that's the way it goes. And the damn thing pivots and ratchets right back up. Fascinating how we bumped up against this trend line here. And you can see we ran into resistance there. That was just too big of a hurdle to get over. And also, it looks like, I'm not quite sure what this line was drawn off of, but it looks like I've got a line out here somewhere. That's kind of odd. It's just floating out there in space. Oh, well, we'll get rid of that. Anyway, so I put out tweets recently. Actually, it's also interesting too. Remember our sort of forecast? I thought it was going to go up and then down and then pivot and away we go. We had no up here, right? I was really looking for that up coming out of here, and there just was no up yet. So as Kiran would sort of tell you, market structure kind of people, this has got to stop making lower highs and lower lows, folks. Now, is that the case where we rally up into these levels, take out these stops, then settle down, create like a pattern like that, which would be like an inverted head and shoulders? I don't know whether you can see that or not, but something along those lines. It's terrible drawing. That's my. No, I'm not gonna get into the business of predicting here. I don't know what the fuck's gonna happen here, but you're gonna need to see something like this to actually break the bear. This thing is full on bear right now, and not a good idea to step in front of that, folks. Just isn't. I mean, maybe if this thing could come up, settle down, start painting a few higher highs and higher lows, maybe you got something to work with. But, the irony of all of this, and this is our original trend line off of the top, what's our rule? Are we allowed to take a trade right there? No. Give me a W. Come on. Give me a W. Give me a W. Give me a W. I mean, look at this. This is ridiculous, eh? I mean, if you had just simply said, look, I'm going to buy the first W that comes in, that was 50 G's. And here we are at 36,000. I mean, holy for holies. Talking some, even if the goddamn leader of fucking El Salvador had just said, you know what, I'm just going to incorporate this one little concept before I go and spend these good people's money on Bitcoins and just give me a W on the other side of the trend line. Man, he would have saved himself some serious money, eh? So if it works for the president of El Salvador, will it work for you? I don't see why not. No? You guys aren't impressed with that, eh? Oh, well. Crypto shows 6 o'clock Pacific time there, Dave. I don't know what time that is locally. Yeah. Well, all I'm saying is just give me a goddamn W on the other side of the trend line. And it's so cool when you got like guys who are pure computer geniuses like Sjord going, actually, this TA shit's really easy. All I gotta do is just draw a downtrend line, just say, show me a W on the other side of the line. It's just that simple. If anything, it's almost shocking how simple it is, eh? So anyway, so there's your commentary. You want a commentary on the corn? Top of the trading range right now is 43 and change. Bottom of the trading range 32 and change. Full on bear mode, and until this thing starts Wing out, there just isn't anything to do on the bull side. I do have stink bids working for whatever it's worth. FYI, to buy at 25,000, so down in this area. So if we just saw another puke out down into here, that will fill me there on a run of these lows. I also have an order to buy at like 15,000. I guess that's against these lows, 78.6. Yeah, that would make sense. Right in there, I guess 16,000-ish now. And then I have another order to buy at 88.6. And frankly speaking, I think this is going to be our bottoming level because this is what Bitcoin always does. And I don't understand why people in the public don't talk about this. It drives me crazy. Bitcoin almost always goes down about 80-90% of its previous move. I mean, always. That was Kevin's insane trade there from like a year or two ago. So why would this not happen? Oh, well. So there's your Bitcoin commentary. And unfortunately, and as Julian says, I think Julian has this tapped correctly. As long as the corn's pointing down, there isn't going to be a hell of a lot of made anywhere else. And maybe if we can just stabilize and create a trading range, kind of like what I was hoping with these big heads and shoulders, at least in that kind of trading range environment, you can have these little shitcoins do their thing. But if Bitcoin's in full-on bear mode, your best bet just to cool your jets. Just to cool your jets. Well, for whatever it's worth, Andre, Sjord still has his bid working at $600 BTC. All I will say is I believe that there is a significant institutional participation in Bitcoin right now. I believe that they will start to get very, very concerned if we start getting anywhere near levels that would enable things like 51% attacks. So as a result, I think our sort of conservative cost of production windows, with and the irony of it all is that this might even start becoming dated technology. These S17s and F19s, I think they're a pretty good idea of sort of where industries break even is. And, all the, 13s, 15s, 13s, 9s, 7s, whatever, they've got higher and higher and higher costs of production. Those are the people, they'll get slowly flushed out of the system. As soon as you start hearing any kind of talk about 51% attack potential, we are very, very close to a bottom. But usually what ends up happening is it takes like 4 or 5 months for that conversation to be had, kind of like in here, where everything just goes dead quiet. And also, too, after the Mike Hearn rage quit, pretty much everything just went quiet here, especially in here. This was an interesting window because everybody knew that there was a big fundamental event coming. That was the Silk Road seized coins second auction. And the first auction, Tim Draper bought up top here. Second auction, I don't even know. Did we ever find out who actually bought these second coins? It might have been Draper again. I can't remember. But anyway, point of the matter here is the conversation kind of, speculative of Bitcoin changed. And it was sort of like, okay, we're now in the developer cycle and all that kind of fun stuff. Yeah, okay. So Crypto Cotter says 18,450 and 23,740 for gap levels on the corn. And I don't mind that, as we sort of work our way. what might be interesting this go round is they just rip the fucking bandage off. Rip. I mean, nobody's expecting that, right? And so, I mean, I do find it fascinating how we've just gone straight down here. Maybe that's what they're going to do and just drive everybody crazy. And what might end up happening is, they rip the band-aid off just violently. Maybe we even create something like a megaphone here, right? Boobity boo. And that would mean they rip the band-aid off. Boom, down into here. Which, ironically enough, there's March, April, May. There's July. I mean, maybe they just rip it all the way right straight down into cost of production levels. And then we go ripping straight back up to new highs. There's no reason why that couldn't happen. And that's the last thing in the world any of these people are expecting, right? Am I right or am I right? Or am I right? Or am I right? Am I right? Anyway. We'll see how it goes. Only time will tell. What I'll just simply say is just wait for that trend line to be broken and a nice big fat W to come in here. And it's a no-brainer. Right now, no W, no brainer. Keep your money in your pocket. And, for full disclosure, I bought a couple names here recently and I got blown out on them. So I took my lumps and just hop off on the sidelines. I picked up a bit of that Ave and it lost the lows. And I just said, you know what, better get me out of there. It's actually sitting right where I walked away. So, I mean, it's not like it's an absolute catastrophe right now. This thing might bottom, but, I'd have to actually see a new setup for me to get bullish. And then there was that chest, same sort of thing. And these little pieces of shit, the names that really don't have any sort of backing. This was just a flyer. Yeah, when this thing broke here, I was just get the hell out of here. And sure enough, this thing's just garbage. Now, I actually might have bought a little bit more of this cello because remember, I had 3 orders working and I think I just got filled here. So, not a bad opportunity. Well, you know what? I'll check it after I'm done the video and I'll post in the room. Now, this might be another one where you guys go, well, Brian, you just bought in the face of these M's. What are you, crazy? Yeah, sometimes I actually think I could probably be certified. All I'm going to say is I like the idea of accumulating a position against this bottom. But that explicitly implies that we could very easily see this tail eat no problem whatsoever. And I got a funny feeling that's exactly what's going to happen here. So I did have all these orders working. This isn't one that I gave up on. This is sort of my last little hurrah in the space. And I still had one more order that I wanted to get filled. And I think I just got filled there. So like I said, I'll do the write-up for it. So go figure. That one actually I haven't given up on. Having fun. I mean, it's just, it's a trader's life. The funny thing is, you can get stopped out on these. I think my average will be in here. You take that kind of loss. And then, if the darn thing works, it's ridiculous. The doubles and stuff that you can realize on these things. But 2 to 1, I would probably go for, actually, wow. So 2 to 1 risk reward is somewhere up in that $8. But actually, well, that makes sense. I'd probably look to sell half on a double on that. And sometimes these silly things can go just absolutely insane. So it's a risk I'm willing to take. I don't mind that. It's everything in my wheelhouse. So yeah, like I said, I might have gotten filled in the face of some M's here. This is my trading plan. Doesn't necessarily mean it reflects you. And if anything, this might even be a good example where my mother used to sit there and smoke like a chimney. And she used to look at us kids and go, don't smoke, it's bad for you. And it's like, okay, well, be a hypocrite. If you're like, well, Brian, I can't do that. I'm totally cool with that. And hey, there was one that I bought that it recently emptied and I got stopped out and I lost money like a boss. And I'm totally cool with that. I don't have a problem with that. I'm very happy with what I've done in the market. If anything, obviously we want to do more of what works and less of what doesn't. But what I would say is in a bear market and in a correcting market like we're in right now, you're going to get stopped out as you're trying to like pick these bottoms. It's going to happen. And some people would be like, well, why don't you just wait for anecdotal evidence like Bitcoin, putting in some sort of bottom weekly W or something like that that says, hey, the bear is over, and then go back to that. Sure, that's not a bad idea whatsoever. And in fact, I would just say, I haven't done too many of these kind of trades. I've had a few of these bids in. Two of the recent ones have gotten blown out. Of the three, this is the last one. And if he goes careening through these lows, then I'll just get out of this thing too. And it's a trader's life, folks. I'm happy with my performance. If you don't want to subscribe to my newsletter, I'm not here to sell you a newsletter. If you want to learn how to build a small business of trading and learn, the sort of best practices of building that business and running the business, hey, we got a product to sell you. It's totally awesome. You want a nice little algorithm that's going to just sort of give you the general technical health or ill health of the market? I got an awesome product to show you, and it'll be my pleasure to demonstrate this over time going forward. Am I actually trying to sell you to buy something that I have a vested interest in you actually participating in? Not really. I'm a 33% owner in this company, but to be perfectly blunt with you, I have more than enough money. I don't need to sell you anything to make any more. I'm very comfortable, thanks. So if you want to sit on the sidelines and laugh at me as I get stopped out, hey, totally fine. PMA for the win, right? We're all in this together. I try and help each other out. I'm not giving you any promises that this trade idea is going to work at all. I'm just another guy in the market just trying to make a buck. So we'll see how it goes. Probably, I don't have a lot of buy orders working. So this was one of the few ones, and it turns out it's filled. So probably I'm not going to be doing a hell of a lot more buying until I actually start seeing W's and momentum divs and then good trade locations come in. As soon as that happens, and I'm an open book, right? So as soon as that happens, Brian, he's going to be jumping up and down and saying, like probably the best scenarios to be looking for right now are like L tangonators with double bull divs. Like that would be the perfect sort of trade scenario in this kind of market state where literally it's just bulletproof. So is that an L tangonator with a double divergence working? No, I can tell you right now, absolutely not. But is this a trade I'm willing to work some stink bids and get filled on move against the lows? Yeah, and of course, keep risk appropriate. Don't be taking trades that you shouldn't be. Somebody says Ada is doing that. What's weird is I saw from Trex, they are really shilling Ada hard here recently, which I thought was kind of odd. Let's go see what that looks like. Yeah, I don't know. You tell me. Just looking at that chart, is that in a trade location that Brian's going to get really excited about, Dave? What do you think? Somebody wants to help Dave. What's a fib number that when Brian sees the fib, he's like, oh my God, I love that level. Oh my God, Bob. You know how often markets bottom off of this level? Oh my God. Anyone? No one? Bueller. Hey, Crypto Cotter. He's listening to me. Adam. Now, I respect Mountain. Mountain used to make money off of it used to drive me crazy pit trading with Mountain because that guy hit that damn 61.8 religiously. I don't actually take too many trades off 61.8. And especially like position trades. Usually 61.8s get hit, they bounce, and day traders like Mountain, they go and make a pile of money. But I'm a huge fan of the reload zone, and really I love when markets bottom off 78.6s. If I was gonna have a fib to fall in love with, it's that. And I think I told you, like Simon Dixon, he said just to all of his audience, he says, you know, you want to invest in crypto? Just wait for a 70 to 80% correction off of the previous peak. That basically right there, 78.6. That's about as close as you can get to 80 as fib wise as possible. And then also notice too, oh, what a coincidence. This darn thing has a big old breakout level at that level. Probably also too, we can change this to a log chart to get an idea. I don't like the look of this sloppy top up here. I don't know whether I'd call that a head and shoulders though. If I did, I think I'd have to use like a slanted neckline, something like that, which means that it's probably something along those lines. You really don't want to see the market break below that line, because if that's the case, man, oh boy, that means we're heading down here big time. So, maybe somewhere down in here, I like ADA. That's versus BTC. You got to be careful with this thing, right? I don't like to look at these cryptocurrencies unless I'm looking at them versus some sort of stable coin. At least you can get an idea. I don't know if it's Bitcoin's going to rally that causes that chart to change, or ADA is going to rally, or Bitcoin's going to go down, ADA is going to go up. I don't know. But when I look at that chart like that, this is in fiat currency terms. Has that chart moved up a bit? Is this the kind of idea that you come in here and you buy when they're crying or selling when they're yelling? What's the percentage move here? So you want me to come in and buy a market that's up 17,000% off its lows? Where's that Dave guy? Because you were asking. Like, Dave, do you see how, I don't know whether you are, there's no way in hell you could be a site veteran. No way in hell you could be looking at that chart. That, I hate to say it, that's got trouble written all over it. Is there a chart pattern that we kind of like to trade that actually is suggesting that this thing kind of wants to point lower here? There is. And if I ask a question like that, I actually expect an answer. So, Dave, what's the chart pattern here that's working? Unfortunately, it's a bit bearish. How about you people in the lounge? Is there an El Tango? I don't know. I don't think I really have that, because there's not. I mean, I suppose that, because keep in mind, this is a log chart, right? Like, ironically enough, what we should do is do a 50% rule. That's really our natural retracement. So where the hell's that? That looks like it's already happened, eh? Ay, this looks very, very dangerous. And that's the problem with these kind of assets, right? Is that, when we change this back to a regular chart, you don't really see it. You don't realize how big of a percentage impact this move down here is going to have. So it might be in, actually, you know what chart pattern this kind of looks like here? Mind you, my question for you guys off the log chart was, did you see that this looks like boom, 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 boom. And now the question is this our shoulder? Or our neckline, beg your pardon? And then we got to come up and do that. I don't know whether, that's not even really that parallel of the line. That might be like that. Maybe. If that's the case, then maybe you've got something. I don't know, though. That looks awfully dangerous. So interestingly enough, right, if we change this back to regular chart, I don't actually think there's a short trade here. I think you kind of missed the short trade. Because ideally what I would want to do is I'd want to like sell an M. Like if this went up, down, up, breakdown, I'd want to sell that, have my stop up there. So this is my risk window. And I'd want to take profits at that. There is my profit window. So it's actually a really good example in our day trading room on the crude oil this morning. We have a Fed announcement. We got a Fed announcement in about half an hour, eh? Good to see the stock market's gonna stop going straight up there. That was getting a little concerning. I think you'd like the market to calm down a bit. So this happens to be our European close trade. I don't know how long you've been trading, Dave. This is a pretty sort of bread and butter trade where you have a bottom of the range, top end of the range. You expect a 50% retracement. It's just sort of what traders expect. Double top, and in this one, it was so beautiful. There was a cute little double top right in the double top. There's the euro close. Beep. Have your order working at the double top fail level. Ding, ding, ding. You get your fill there. And it even traded a tick higher, so you can pretty much be assured that you did get a fill. And straight down to the 50% roll. Beautiful trade. And interesting how once the 50% roll is tagged, boom, straight up to new highs. So anybody who was sort of slow and not really paying too close attention, they got stopped out and they actually lost money there. So that's how quick these 50% rules can play out here, Dave. So that's the kind of stuff that I want you to learn. That's like El Tangonator, like if this was a bear div up here. Interestingly enough, this also was a bullish bot. So Boo Boo consolidated, and Tafari, he was the one who was asking about this. So spot on. And we were sitting in the lounge going, how the hell is crude going to get all the way up to $88 a barrel? My goodness. As we were sitting here, because this was a really important 4-hour horizontal line. And so actually first thing this morning, right out of the gate, you can see this was an important horizontal support and resistance line. So off our 4-hour charts, that was this level. And it was also a 2.618. So it's a pretty important level in there. I came in and we were hunting our setups like a dog. There's the level. The divergence came in. We never did get an M breakdown through here. We pushed up higher, and then we got this quick little zing, zing, zing. And the problem with this was I couldn't get short from that level. That level is 87.21, and this thing had tripped up, and it just went straight down. The best I could get filled in there was 87.19. Boo, this is boo. So what that meant was if I was going to get a 2-to-1, I had to have my target at this profit objective 87.30. And you cannot be assured to fill in futures land unless you see the price trade one tick on the other side of your level. If you don't see that, there's no fill. Maybe you get lucky and you get the fill, but you can't be guaranteed it. So look how close I mean, it pissed me off. It traded right to my 2-to-1 level. I should have made money, but nope, no tick beyond it. Can't be guaranteed a fill. Market came ratcheting right back to my stop. You know, 50% of the anticipated range. I always move my stop to scratch, and I got stopped out. Remember, I'm hunting a short off of this important 4-hour horizontal support and resistance level. So we're like, okay, fine. Let's see. We'll keep a close eye. Let's see if we can get another one. And sure enough, another tight little double top came in right up against the top end of the range here. And we're like, okay, let's go again. And you can see this one, it was painful. 50% of the move. There's 2-to-1 there, but 50% of the move your stop to scratch. Boom, you're stopped out again. Jesus H. Christ. And then what pissed me off is the darn thing rolls over and goes right down to my target level. Well, it's a trader's life. What can you do? I mean, what we're really looking for is we're just looking for that flush. What was fascinating about this is that Craig, he takes a little slightly different approach in that he's got a set 18 tick a profit objective, and I think he actually got short from 20. So he had a little bit better level, and like I said, the bottom of this move was down to 86.97. So he got his 18 ticks. Yeah, he actually did very, very well. And so he booked his profit, and I got stopped at scratch. And then it happened again, and he made another 18 ticks. I don't think he got stopped out on this one. So Craig was just trading circles around me today. It was kind of frustrating, but hey, it's a trader's life. This is my setup. This is how I trade. And he was just kicking it. So hats off again, Craig. Like I said, when you're in the zone, oh my goodness, you're like unstoppable. But it was interesting. Of course, we had EIA report today too. I talked to you a little bit about those numbers. So that came out around in this, and you can actually see through the EIA report, you can see volatility got absolutely crazy through here. But what it did do, and we were sort of watching this conjecturing, and I said at this point here, gee whiz, this looks like a bullish bot. So ahead of the EIA report, there was a little FU against these lows. Then the report came out, and then you can see the bottom started to form. So taking this full range, low to high, and then projecting that low to high, that gave us our target, 87.85. And you can see, I mean, the bot, it developed pretty nicely off that level. You can't say you didn't have the opportunity to get in. The only problem with this is you notice, then this is typical Fed day. So it doesn't surprise me. Like I got stopped at scratch twice today. But it doesn't surprise me that ran up, moved stop to scratch level, boom, stop at Brian gets stopped at scratch again. So that's a very typical Fed day for a guy like me. So that actually seemed perfectly normal. Interesting how there's this cute little double bottom right off the 25 level. You could have snuck in there and it would have just been woohoo. Maybe, oh no, I guess, no, yeah, that would have worked pretty well. So, oh well, it is what it is. Fascinating to see the market did run up, and interesting, right on this level, the market totally topped. So, what a great analogy that I actually think that this was a PRZ. I mean, that's the whole point of this these bot setups is actually they are bastardized harmonic patterns. So you could have made an argument that this was a B, C, D, and this is actually a short trade level. What do you think? Would that have been a half decent short there? Pretty good. Maybe you don't even hit this, but you say, look, if I get the market hit this level, then it backs off, then it rallies back up and it puts in an M, and we'll even put a horizontal line right there. Is that a trade you could have considered? I don't see why not. Right in there. Look at that, eh? 88.6, 78.6. Hell, you could have even gone, oh, there's reload zone. Okay, let it back up. And then gone into hit 78.6 in 78.6. And of course, you go short there. Insane trade. Impossibly difficult. But hey, if you practice it, you could get good at it. And boom, down you go. I think I told you recently we've been practicing the Thomas Euro close trade. And so that was that shorting that double top there on the Euro close, dead cat bounce into that level, and then taking profits at the 50% rule following the European close. So it's like they ran the Europeans out on an uptick, short covering rally, whatever you want to call it. And as soon as the market was done, then the sort of the air came out of the artificial bubble. Another nice little FU move. If anything, this is a really, really good example. I wonder if Craig took this trade. Notice how the market moves up to this horizontal support and resistance level, and look at the letter of the alphabet up here. Like, this is Craig 101 if there ever was. So I've been watching him for a while now. I think I have a pretty good idea how the setup works. But you can see, wow, what a beautiful trade there, right? I mean, maybe you go short there on the M. And that's a pretty good looking M too. And hell, I mean, look at that, eh? How many ticks could you have taken out of the market there? 2 to 1 is right to there. So you know me, I'd be taking some profits there. But remember we said the 50% rule is there. I suppose you could have done a 50% here. So that's, you could have used that as a profit objective. That's 3 to 1. Oh, geez. And I don't know. I mean, I suppose there's probably other setups that we could use or sort of target determinations. Hell, you could probably done a foggy boggy off of this. Let's see what that would have given us. How about down to, well, probably take it off the original top. It's probably really small. Boom. So 2.618. I like that 4.669 in there. All right, that is there, and that is there. So, wow, what a surprise. This stuff even works off of tick charts. It's crazy. Look at that, 4.669 is the 50% rule. Look at, oh, Jesus Christ, look at that. Wow. Can you guys see that? Well, you would have been like a total trading boss if you had said, like, I'm going to short 3. I'll take 1 off at 2.61. Take 1 off at 4.669. Take 1 off at 877. I mean, what's that trade? That would have been like the killer traders trade. Where is that? It's over here. 6 to 1, like a boss. Interesting too, this actually looks like a megaphone, which is scary because you got 1 high, 2 highs, and then we've got 1 low, 2 lows, 3 lows. I think this is going to work its way right back up here. So if anything, coming out the other side of the Fed, we still got about half hour or so. Don't know whether I'd be inclined to take it. Probably wait till after the hour, but you could definitely see something is brewing here. Pod setup, boom. We'll flip that around, boom. So we've done 33. We've not gone beyond 66. We'll clone that. What do you think the odds are that this target's going to be right up against that megaphone level? No, not even. I would have thought we would have been up here. You know what this might project is and what do we want to do here? Extensions? Douche. But not that direction. Other direction. Extensions. There we go. Don't need that. Don't need that. Don't need that. And we'll put well, 25. I don't have the other numbers on here. Oh, we'll go 0.3. No, that's not what we want. We want 50. And 0.26. All right. So I could, in fact, actually, you can even see the trade setting up. So you can go boom, boom, boom. There. And off of there, maybe something like that. So rally, pullback, something like that. And yeah, I kind of like that. So 127. The bot objective is nothing more than a test of that high. Alt ABCDs. 127.2 would be probably a very respectable megaphone level up there to hunt for a short. And then, if this is a super blow off top, watch out for like 1.618. Anyway, so there's a life for a day trader. Hope you enjoyed that walkthrough. All right, so we got about 20 minutes till the FOMC. We talked quite a bit about the market here today. I wanted to just quickly check in on that Q&A document, see if we can answer maybe one or two more questions, and then we'll send you on your way. So let's see, how far did we get on this thing? All right. Remember I answered that yesterday. In fact, actually, I showed you guys the PAMP if you were watching. A really good example of a short setup right now that I'd be more than happy to take. What kind of foundational knowledge is needed to be a skillful at technical analysis, i.e. advanced math, statistics, probability, graph theory, or just acute observational skills? And I don't know who asked this question, but my simple answer is the less you know before you come to me, the better. If you are in kindergarten and you failed out of kindergarten, that's probably excellent basis for your educational skill as far as I'm concerned. Ironically enough, what we actually teach is not really anything to do with skill other than managing your own behavior. So can you manage your own behavior? Maybe a kindergarten fail out, maybe not. I mean, kindergarten, I think you have to kind of control. Yeah, I think to pass kindergarten, you have to be able to not pee your pants in class. I know there are a lot of traders that have a hard time with that. Johnny Hoagland doesn't wear Depends just by accident, So I don't think you actually need any education skill. And I'm trying to joke with you. I'm trying to have fun with you, but I don't see any of you laughing. So I don't know if I'm doing a good job or not. But in fact, I would say the less skill, the less smart you are, the better. And in fact, what I usually have to do, which really pisses me off because people don't usually see this until years and years down the road. But what I usually have to do is I have to undo a lot of the shit that you think actually is important to trading. So there you go, sir. Probably don't like that answer, but to be honest with you, the less education you have, the better. How do you synthesize the information for the January barometer? Are they weighted by duration? That's a good question. If anything, Rose in Graham Pant, Rosier Grim Pant, you need to get a hold of a stock trader's almanac. And actually, I think I even saw, I don't know whether, in level 3, we specifically go through trading seasonality and we talk at length about the stock trader's almanac, but you really should get a copy of that if you are watching this. And it does a far better job of explaining this January barometer, how you should use it, how you should interpret the information, way better than I ever could. Me personally, I like to watch sort of like the first hour, the first day, then the first week, then the first full month. I've noticed that obviously the perception of what's going to happen in the economy over the whole month usually is different than what the perception of the economy is, say, right out of the gate January 1st or even that first week. So what I kind of like to do is just finesse it. And that's kind of what I was, telling Josh is that we can't really do a full January report until we actually see what the hell the full January looks like. You might find that Chair Powell comes out and says, you know what? Cookies and peanut butter for everybody. You want free money? Here you go, Johnny. You want some free money? Here, Sally. Go have fun. And the market just explodes higher. Inflation out of control. Stock prices all on all-time highs. Oil prices $500 a barrel. Whatever. By the end of the month, I don't know what's going to happen. The decennial year report says that we should expect a fairly substantial rally into the end of the year, which means that I would expect a fairly substantial rally on this January barometer. But it's incredible to watch, like into that options expiry. I get the impression somebody had an agenda there. And it was like, we're going to move this thing down and we're going to keep it down because we have to make sure certain options expire at certain levels. Now, following the options expiry, mysteriously, oh, look how we are climbing the wall of worry. And I would expect this climb to continue right into the end of the month. I wouldn't be surprised, though, now you can clearly see this, right? By them gapping this market higher off of the lows, they can now, this is what I'm worried about, right? Maybe the Fed comes out and says, you know what, we're going to raise interest rates a quarter point because we think the economy is really strong. You might see the market go wham, just right away to fill in this gap, just straight down, boom. And then turn around and put in a W and start climbing the wall of worry again. And really nothing happened here. Kind of like this shit, right? Ironically enough, this gap lower and then this price action down here did no technical damage because we didn't take out this low. Put in a W and just keeps working its way higher. So I can see the same thing. So I still think we should wait until the end of the month to really get an idea of what the January barometer is really telling us. And, you know, that we started way up there. I mean, it's going to take a half a fucking miracle to get us all the way back up there. I just don't see that happening. So January barometer, you know, the one little thing I think we can take away from this is that the January barometer, the sentiment in traders' minds is this is going to be a down year in the stock market, which generally means that this is going to be a soft year in the economy. So that's about all I can really infer right now. Let's see what the next, few days, next week or so gives us. And like I said, maybe they pull a rabbit out of their hat and this thing just goes absolutely screaming apeshit higher. That's what theoretically the first day suggested. But you can see there was something that happened here where instead of coming down and testing these lows and turning back up, we came down, tested the lows, and there was another massive wave of selling. So something's disconnected from even just the first day as we move through. And I think that this was all economics, like, sickness, interest rates, inflation. And then lo and behold, somebody over there in Eastern Europe has just thrown a fucking massive wrench into everybody's plans. I think you know who I'm talking about. So we'll see what happens. Only time will tell, as they say. I hope that helped answer that question. And we'll update the January barometer report. Maybe Josh can even go in over the next few days and just do updates to that blog report and maybe add a note or two that he heard me say here today just to sort of clarify. But I'll tell you, man, on balance, this January report is not happy whatsoever. January barometer, beg your pardon. It's an ugly looking market out there. That's for faux show. All right, maybe one more question and then we'll call it a day. I'm feeling kind of tired. Got a bit of a headache. I wonder, I actually went out and went to that Toyota dealership yesterday, interacted with a whole bunch of public. I wouldn't be surprised if I got the Rona there. I don't interact with the public very much. I have a headache for some reason, so wouldn't surprise me if I just got it. Okay, why does it seem like not many people go short? Is it harder to short? Everyone seems sad when Bitcoin goes down, but there are people making a lot of money shorting the market. Where are all the shorters? Well, I mean, you made a big assumption here. Who says this? But there are people making a lot of money shorting the market. If there is somebody in particular that you're talking about, well, worth listening to. I remember about a month or so ago, there was one guy that was crying bear. And he had a whole bunch of technical analysis and studies, and he was kind of like, rah, 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 bear. But probably what you need to write down, whoever asked this question, is this one saying, because this is how it almost always works. In a bull market, everybody makes money. In a bear market, nobody makes money. And the interesting thing about, like, if you think about shorts, number one, are we ever going to risk 100% of our portfolio on any one trade idea? You know, you're in the education program. Maybe go grab that introduction to capital markets. Something about horsecocks, right? Cool. Go grab that book and read rule number 2. And keep in mind, you're going to be getting this rule number 2 out the butt as we go further and further in the course. It's that important to investing and trading. So by definition, you're never going to short 100% of your portfolio. So that means even if you just sit in cash, which that's actually what I would prefer to do in bear markets, is just ride out the bear. You might have a few short proxies on. Nothing wrong with making some money on the short side. Keep in mind, I mean, I don't understand why people are assuming that I don't have any shorts on. One thing I do like to do is I like to short the market through bear ETF proxies. Where the hell's my screen? Not there. There, I guess it's this one. So I've got all these funny bear ETFs. They're all down on the day now because the market's rallying. But this dog, for example, I got a whack of it on the books. It's basically a bear ETF. If the Dow collapses, this thing will rally. I think I'm long from, you can see where I'm long from, right? These little things. So kind of just bumping along. I think I actually even have some options on this thing too. I'm long this SPX. You can see, I think this might be on a split adjusted basis. I mean, there's nothing going on here. But if the market collapses, you can see these damn things will go zooming up. I'm long the Canadian bear ETF. Same sort of thing. If the market collapses, I got lots and lots of exposure through this. It will go up. All of these are bear proxy ETFs. So in a weird way, I am short, but I'm short by being long. I don't mind that. I don't like outright shorts because technically that's open-ended liability. So maybe you need to learn what open-ended liability means. Really good example of open-ended liability is this gentleman. So this is the number one reason why you never. I mean, this clown, he was writing call options, so that's not only is it's dangerous for your health to write call to short, right, open-ended liability, but this guy's writing call options, which is like a double whammy open-ended liability. Anyway, I threw the video in the lounge, just so you can get an idea how bad can get if you get caught going the wrong direction too hard in the market. And this guy basically wiped himself out. And look at his website is called optionsellers.com. It should have been we're setting ourselves up for disaster.com. So just why? I mean, how long have I been at this game? I showed you everybody on the Broiler Chicken show. I still have quite a bit of hair on my head. I'm not gray yet. Yeah, I shaved the other day, and somebody's like, "Gee whiz, you just took 10 years off your life." So, and the number one reason is because I do not short. I don't take risks I don't need to take. And the problem with open, just open shorts is technically you could get ruined if the market moves against you. So I don't like it. You want to go to Deribit and buy put options? You could have gone and bought put options on all of these crypto stocks and stuff. No reason why you couldn't have done that whatsoever. So there's plenty of ways to make money on the short side. And you could have done it through crypto. It's just I don't like to quote unquote short. Andre says I have a baby face. Well, you're a sweetheart. That's just all my baby fat. Actually, I'm one of the only people in this world that actually the baby fat is getting more as I get age. I'm not quite sure how that works. Yeah, no, I'm not gonna. You know what? I'm not gonna show that, Cotter. Cotter put a comment there on YouTube. I'm not even gonna show that. That's just rude. All right. Are you guys enjoying this conversation? What do you think, Chris? Am I doing a little bit better? And that summary was a bit better today, wasn't it?
Much better. We stayed on track for the first 15, 20 minutes.
Yeah, all right. So because it's a Fed day, right? Obviously, and somebody keep an eye on the Fed or keep an eye on the news wires. As soon as you see what the decision is, I'm just blabbing away here. I don't have it on my screen. Can you just post it in the lounge? Just so everybody knows what it is. And really, probably as soon as what's his face starts talking, we should probably hang up this call and head on over there. It'll be interesting to listen to his spin here today. Okay, so can I talk about the Demon Finder? Talk about. I'm not quite sure what that means. This is a document that we hand out on the first week back for the level 3ers. So right out of the gate, level 3 class, we're sort of like, okay, quit fucking around. You got to get serious about this. And we have, kind of a serious conversation with the king. I thought they went through their sort of, okay, I got to get serious about trading plans and journals and demon finders and mistake logs and all that kind of stuff. Didn't hear anybody talking about the report cards in class. So we should probably get on that. Maybe Zach, if you're watching this later on, maybe next Tuesday we should mention that. What's it? Talk about. I'm not quite sure what you want me to say here. This tool is to help you see where you are making mistakes. So the first one thing you have to understand about this is you have to be 100% transparent about your trading. You can't lie to yourself. And most people in this game totally lie to themselves, and including myself. I'm not going to sit here and say I'm better than any of you. I'm not. I suck horse cocks. Oh, geez, somebody get that on tape. But what I found really interesting, because I wanted to be a funded prop trader. That was a huge accomplishment I needed to have in my belt. But the only way those people are going to give you money to manage is they believe in you. And the only way you're going to do that is you got to show them that you can perform. This is not an easy game. And, you can imagine all the demons running through my head, even to this fucking day, about my wife and her passing, right? You know that. I know that. So, this is one of the hardest jobs in the world, folks. I would actually say to be a really good trader is on par with some of the most difficult jobs in the world. The problem is that you don't have to have a university degree. In fact, you can't even learn this skill at a university. Nobody in a university will teach you this. In fact, the worst part about it is at university, they will say to you, because they're funded by the banksters, and the banksters, of course, don't want competition in this space, but they will actually say to you, well, you cannot predict the market. It's impossible. No. What's that? Your balls shriveling up, Cotter? Is that what you're talking about there? So this is the only business where you have to make them corrections in yourself and nobody else can do it for you. And if you can't commit to making those corrections, you're never going to make it in this. I can tell you right now, you might as well just stop watching these videos. There's no point in revisiting our site. If you cannot commit to making the changes that you have to commit to making in your own personality, don't go down this road. You are just wasting your time. Go and have fun. Go ride a bike. Go run off and join the circus. Have fun. So this document is all about, I have to get rid of mistakes. I am a professional money manager in the marketplace. I cannot let mistakes derail me. And the irony of this, and this is what I found when I was going through my process of removing the mistakes, is you end up making the same damn mistake over and over and over. And because it's like a year or, a day later, a week later, maybe even a month later, you don't connect it unless you take notes. You don't see the connection. And it's just like Einstein's definition of insanity. You don't know what that is, maybe look that up. It's actually a real thing. And it happens every single day of the week, and people just con themselves. So, this document is all really about where are you making the mistakes. There are so many different ways to screw this up. You have to sort of drill into, number one, you have to identify what you're good at. And maybe you are the fucking shit at identifying setups. No problems here whatsoever. My problem is I always exit too soon. I get chicken shit and I run for the exit. I always move my stop to scratch as soon as I'm in the money a little bit, and I'm just constantly getting stopped out at scratch. Then I got to take a loss every once in a while. So as a result, I'm actually losing money in this whole thing. That's what this document's all about, is you got to identify where it is that you are fucking up. And very simply put, if you just keep making the same damn mistake, after, and maybe even 9 is too much. But after a while, you got to sort of say, look it, I got to stop trading. I can't stop making this goddamn mistake. And until I can somehow commit to stop making this mistake, I got to fucking save my money. I'm going to go broke. That's what this document's all about. So I don't know when I asked this question. I don't know whether you're here or not, but I hope that helps. Is this a level 1 thing? I don't want you guys to get too stressed about this in level 1. You've got so much to learn. You've got so much to work on. Like we've distilled 30 years of my career into 36 weeks. And you guys just expect that you're going to pick it all up. I mean, I give you the 30 years of my career. You get the information, but that doesn't mean you're going to actually be able to apply it. It might take you a couple years just practicing to get to the point where you can actually apply all this shit. So this is a document that I like to show to my students that have gone through the level 1. You've learned what a trading plan is. You've learned how to build a trading plan. You've learned the basics of the capital markets. What are some of the basic type of assets and how do they move? And how do we value things like commodities and how do we value stocks? Level 1 program also wants to teach you a very basic introduction to technical analysis, understanding the 3 sort of core components, unrelated reasons. And if you can find 3 unrelated reasons, odds are you can find 4, 5, 6, and 7. We give you a number of different tools to identify things like trade location, momentum tools, both volume and price analysis. The goal in the level 1 is just to teach you a couple really basic setups that I've used now for like decades. So I know that they hit that 60 to 70% win rate if you don't make mistakes. A lot of time, most of the time these trades don't work is people make mistakes. But you going through the level 1 course, you got to learn all that basic stuff. I don't want you to be obsessed about, okay, I got to buckle down now and I got to get serious about this journaling. I got to get serious about logging. I got to really, laser beam focus on taking valid setups, and I have to track every single thing I'm doing. And now I'm in a day trading environment, so I'm trading off of like tick charts and range charts, and I'm using various different concepts like volume profile or horizontal support and resistance or trend channels or something. These are advanced concepts. It takes us a while to teach you all of this stuff. So, consider the level 1 that sort of, eating my vegetables. And then at the tail end of level 1, we're going to give you a bunch of candy to have some fun with and introduce you to the fun part of this business, technical analysis, squiggly lines. But also, too, at the same time, we introduce you to how am I going to effectively run this business of trading? That's the shit that you've got to learn and get down in a level 1. Level 2, we continue on with the candy store. Lots of candy. And of course, we introduce you to a professional futures trader who's just basically all candy. It's fun talking to Kiran. Look at all these fun setups and stuff. And, what's so cool about Kiran, he's like, if that's the setup that works for him, fucking A, rock it. If it doesn't work, I'm not trading it. It's not my setup. I haven't vetted it. If I like the setup, I'll go and vet it. And if it meets my criteria, then I'm going to trade the setup. And he's very matter of fact. I mean, the irony of it all is that, and Grimm told the level 1ers this the other day, running a really good business of trading and investing is actually kind of boring. But no, you guys are all fucking full of, that fucking I think that's, I don't even know, German guy, whatever. This is the most incredible thing that's happened since yesterday. Fuck. That guy's going to give himself a heart attack, I swear. Anyway. So once you get to the level 3 program, and keep in mind, I'm still sort of directly attached to the level 3 program, but once you get to that, all right, so we've got left interest rates unchanged. What a surprise. Points to a possible interest rate hike in March. All right, well, there you go. And Josie's got the Fed live video. So if somebody wants to let me know when Greenspan, or what the hell's his name? Chapa! And he says he starts talking, I'll wind this up. Okay, guys? So once you get to that level 3 program, and that means you've been working with us for a good 6-8 months or so. I like the idea at that point to circle around and be like, okay, kids, enough fucking around. Let's get serious here. And that's when I introduce these kind of documents because I don't want to freak you out right away. I mean, I already ask a ton of you, right? I mean, can somebody attest? The level 1 program, is it a bit of work? Just, maybe a current level 2er that's just gone through the level 1 course. Can somebody attest? Man, that was a lot of work to get through that. Just introduction. Do we really need to be throwing this kind of shit on you at the same time? I don't think so. And then, level 2, man, we start introducing you to all the old school guys. So like fucking WD Gann. All right, take it easy, guys. Everybody's bailing on me, so I must be talking too much. Okay, so hopefully I've spoken to this and I've given you some food for thought there. Number 12, I have a pre-existing position in a growth stock, MMAT, that has gotten smacked down. Look like it's moving into reload zone with the broader market capitulating. Yeah. I'm interested to see how the price responds in the next few months and whether a counter trend rally might be in the cards. For whatever it's worth, it falls into the category of meme stocks. Curious about any thoughts at all. So you want me to comment specifically on a stock? That's the kind of thing where, it's just purely my 2 cents. It's not really like I'm going to be able to read a crystal ball here or not. General rules, don't risk more than 5% of your stake on any one single trade. Is this a kind of idea that's probably going to be weak if energy prices are weak? Yeah, probably. Meta Materials, I don't know what their business is. What sucks about this is in the level 1 course, you're going to learn about head and shoulders patterns. And when it comes to growth stocks, ironically enough, you actually have to use a logarithmic chart to be able to see these things clearly. So we're probably going there to there. And the hard part here is you have to eyeball this because if I just move the line, watch what happens, right? It goes right off the map. So you have to sort of take your hand and sort of measure it and then go off the neckline. And then that tells me to do 1 point right here and another point right there. So something like that. So you can see this is about the same as this. And what this tells me is it looks like the market is going back down against those lows, right down there. Run the stops, flush out the weak hands, blah, blah, blah. Kind of like what they did here, right? So I get the impression these guys, they're pretty good at this game. So you can see how they're setting these lows up. I bet you they even did it before. So I'd be the type of guy where I'd say, well, clearly there's the W, down, up, down, breakout. Are you long from here? And if so, okay, cool. Nothing wrong with that. And what it looks like is you 79 cents, so we'll call it 80 cents at $1.60. Should have let half go. So that's up in that area there. That's probably what that rally peak was. Those guys were selling half on a double. Next level is 3.5. So 1, 2, 3.5, somewhere in there. We'll go there. So that's probably what that pivot was right there. Then next double after that's like what, $7. So what a surprise. That's what that pivot is right in there. So you can see 1 double, 2 doubles, 3 doubles. And interesting, you can see pivot, pivot, pivot. So you can see definitely sellers were selling those doubles. And then, did you get another one? So 7. So what, 15 would be the next double. Well, look at that. So it's up 15, 16. Got another double. You lucky bastard. 1, 2, 3, 4 doubles. So what this means to me, which you're not going to like, is Here I would have half of my original position. Here I would have 1/4 of my original position. Here I would have 1/8 of my position. And now, as of this point, I would have 1/16 of my original position left on the books. Not much. And what I would just simply say is, okay, where is a reload zone? 88.6 is this level. Oh, that's not good. One good part about this is this window should be relatively small. Yeah. So it looks like this old eye, that would have been like the Wyckoff check. You really would have liked to have done that hold. It didn't. So now we go look left, and the next bottom is way down here. That's not good. So also, too, you could probably say, for those that like to short, A, B, C, and then again we get into this nonsense. So actually we'll have to do this as a regular chart, and it's going to get really screwy. There it is. This will go right off the map, so I don't think this is going to work. No. So that's the one thing I don't like about drawing bear charts is this almost never works. So I have to try and eyeball this again. Is Chair Powell talking yet? As soon as he is, somebody just give me a heads up. Chris, maybe you could keep an eye on that. And as soon as you see him start talking, I'll shut the hell up. So AB will eyeball this again. So CD, there's the 0.1, and 0.2 is roughly there. Somewhere right there, right? Boom, 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 boom. It's about equal. Actually, and I like this level because notice this sets up off that original double bottom there. So what I would say is in this particular case, I probably would, if I had gotten this many doubles off, I probably would have bought some back in here. If I was trading this, I would have been told, get the fuck out. I'd probably just be bag holding on just like a portion of my original purchase, plus maybe a little bit of a re-nibble. One of these doubles I might have thrown back in. But it sure looks to me, the original double bottom was a breakout through 50, what is that? 80 cents. So I wouldn't be surprised, maybe throw your stink bid around there, around that 80 cents. I like that level. And then I was saying there just a second ago, this is A, B, C, D, and there's 1 high, 2 highs, 3 highs. My hunch is that could easily be a 25 level in there. And you could go short trading the bearish bot down into that objective. You can do that. So definitely pointing down. Nothing to be done there whatsoever. Probably no divs yet. Yeah, you can see the potential div is forming. Willie's nice and stupid, so that's good. This is a weekly chart, so let's see what it looks like on the dailies. Still like that level. That's probably where she's going. Washed out. Interesting to see RSI bands are starting to contract, so that's a good thing. We've got Willie extremely stupid, and the potential divergence is just working away. So you just need somebody to say something positive here. Get that to W out. Then on the next W, you have something to work with. But I got a funny feeling that's going to happen down here, not up here. And that's about half of what the current price is. Ugh. Also, too, I don't know whether you see this on your chart, but it looks like there's a price gap here, right? So this gap definitely needs filling in right there. And there's probably gaps down here that need filling as well. Yeah, all along in here. If you see any price caps, those would be great places to work stink bids. But anyway, so there's one right there. That's at $1.13. So probably anywhere around that dollar level, that's probably where you want to think about this thing trying to bottom. So there you go. Hope that helps. Not really. I don't even know what the question was here, but I gave you my 2 cents. 13. Brian. Hey, Brian, can you please talk about that 1 equals crisis and what does it mean? 1%. Thanks, Eddie. I think that's the TED spread that you're thinking about. And that is the spread between corporate interest rates and the guaranteed government interest rate. So interesting. Interesting. They just said no raising interest rates this go round. The spread. Interesting. The corporate market has not puked out here. So there is no, we don't need to raise rates. So it's calming down now. It's at 99.915 here for Fed funds for February. So that's basically implying 0.085 interest. And all this really is the teal line. This is that one, right? So right now it's sitting at 36.36. So we're nowhere near 1.0. But you don't want that to be at 1.0. That means financial crisis. That means, oh, fuck, all hell's about to break loose. So we don't want that. What bothers me here, though, is the trend, right? We are trending in that direction. The Fed doesn't want that either. So if you start to see corporate rates crank down, the Fed might not have any choice. If you see the Eurodollar market melt out and just puke out right here and start dumping and this thing cranking up aggressively, the Fed might come out and say, oh, actually, you know what? We changed our mind. Quarter point rate hike. I don't know. We'll see what happens. We're not in disaster zone yet. We're about a third of the way up, like climbing the wall of worry. And usually what happens, right? Now, who knows? There's nothing usual about any of this shit here. But usually what ends up happening is, do you see how they kind of move in lockstep? I mean, that's what's supposed to happen. So, well, we'll see how it goes. And notice here, right? So euro dollar start moving over. It starts breaking down here. And the Fed goes, okay, fine, we got to do something. And you notice at that point, look at that. We're at 0.90. Oh, yeah. That's troublesome. And they start moving, and that relationship backs off. So, does this mean that the Fed could stall a little bit longer in here? How long of a window was this? That's where it looks like the Fed finally moved and changed rates. That was 62 days, 2 months from the peak in the Eurodollar market. And actually, really what we should be asking is, how long from the actual M-top breakdown in the Eurodollar market? Oh boy, interest rates for corporations are going up big time. The Fed finally has to move and actually do something. And that was 42 bars. So let's go see if that even lines up remotely with the world that we live in today. So we don't actually have an M on euro dollars, but what we do have is we have a head and shoulders. So can we use that date there? Maybe. So if I line that date up with the break of the head and shoulders top, you can see 42 bars. They still have, and actually this makes perfect sense, right? They have well into February before that 42 bars ends up. Could they wait another, 2 or 3 weeks to the March meeting to actually do that move? Sure, that wouldn't be shocking. So I wouldn't be surprised if this continues to work its way up here. Euro dollars, corporate interest rates. Remember I showed you that corporate bond market. It looks like shit. I mean, that's a sell. The Fed funds are moving up here because they said they weren't going to do anything. So as a result, we're probably going to see this spread break to new highs. I would imagine that's what's going to happen. So we'll see. Only time will tell. So I hope that helps explain that a little bit more. All right, people are dropping off. Did I get through all the questions? Whoa, all right. 2 more. As we enter into the next 10 to 20-year growth cycle, would it make sense coming from outside to move to the U.S.? Also, would it be sufficient to just invest into U.S. stories from our current location? I am in Europe contemplating whether to move to the U.S. and would very much appreciate your perspective. Yeah, I mean, I like the, in fact, sadly, I'm worried about Europe's future. With Vladdy sort of, getting all militant, I wouldn't, it'd be interesting to see whether the Eurozone actually starts creating a standing army. If they do, then probably you can see that the next big showdown's coming. It'll be the Euro against Russia. As it stands right now, actually, I think Russia's got quite a bit of leverage because the Euro, they're very discombobulated and they're still relying on the United States of America to play bully. So that's not a good sign for Europe. I think I've told you before. I mean, my dream was to go and buy, make a bunch of money with the boys here, teaching you guys, getting Sword to build his algorithms, building a nice subscription-based service with the screeners and stuff like that, and then go buy a nice piece of property in Hawaii and just, build a little retreat where we could teach people in person. I don't mind doing that actually in maybe like southern Florida in the Keys, maybe even on the Gulf Coast, in Texas. California just has such a bad karmic feel to it right now. And, I think it's the whole west coast of North America. Man, I'd love to, Paul, but man, I don't know. There was this one piece of property that was really discounted and I knew it was cheap. And literally the guy went and sold it for a fucking song and a dance. And the government themselves came out literally a week or two later and offered the guy something like a 30 or 40% premium over the price that he sold it at. The universe handed me an opportunity there and I just wasn't able to pull the trigger and I feel very depressed over it all. So it is what it is. Anyway, yeah, I am, and I really do like the idea of the Southeast. I heard somebody yesterday, it made me laugh. I heard somebody yesterday say, Atlanta is the new Hollywood. And I was like, wow, really? This person, I think he left a few minutes ago, so he's not here. But can you guys attest to that? Is Atlanta the new Hollywood? I never heard that before. Yeah, well, that's interesting. Chris says, yeah. So, I mean, I showed you guys years ago, man. I used to go shopping. I had this fucking Georgian, actually, how ironic, Georgian with Thomas. I had this place in Georgia picked out. It was like a 18th century mansion for $500,000. And I guarantee you that place is now $1 million. I guarantee you. That place was dirt cheap. It had 50 acres. It was in Georgia. Man, I would have bought that in a heartbeat. And that was, of course, predicated on Sedona euphoria and all that nonsense. Huh? So, I don't know. I'm just going to keep working my dream. I have luggage. Let's put it that way. So I'm not the type of, and all of you, as you get older in life, Sjord's learning about this now. Once you have kids, everything changes. And technically, I have basically a 10-year-old child for the rest of my life. And sadly, for the rest of his life as well. So it's almost impossible for me to pick up and leave. But I tell you, I also do really like the idea of picking up a cheap place in Portugal and relocating your crypto portfolio and maybe even incorporating like a small company to have all your crypto holdings in Portugal because they have a very friendly Portuguese crypto tax policy. So there's that too. All right. So somebody says Powell's speaking now. Why don't we leave it at that? Maybe we'll pick up and talk a little bit more about this in the next day or two. But I sure hope you guys enjoyed the daily brief. Everybody give a positive karmic thought for my visit with Liam tomorrow. And of course, we'll see everybody for the crypto show tonight, 6 p.m. Pacific time, with Nick, Derek, and Ben. So let's all go listen to Chair Powell and find out what he's got in store for us. Thanks a lot, everybody. Have yourselves a great day. PMA for the win. All the best. Chris, if you